Hey there, and welcome back, or welcome to No Pants Profits. This is Richard. My name's Richard. Still sitting here with no pants and hopefully making a lot of profits. And today I want to say it's Wednesday, June 15th, 2022. I want to say happy sweater day, and you might go, huh? Happy sweater day? Well, I'm wearing a sweater right now, which is not from Sweater because I did a video on Sweater before, and Sweater still hasn't gotten me a sweater. Sweater. Get on that sweater. This is a sweater from another company that I love and I've actually invested in, but some of you might be saying, what the heck is Sweater? Now, I've already made a video on what is Sweater, but I'm going to give you a little bit of a synopsis. And today is the first day that normal people that are not on the wait list or anything like that can actually invest in Sweater. So this is going to come up sometime today. Nobody really knows. It is 12:50 a.m. Eastern time on Wednesday, June 15th, and let's go back. Monday, June 13th, Sweater actually announced the companies that are in their first Cashmere Fund. But I first want to look at, hey, what is Sweater? What does Sweater do? Again, my sweater is from a company right now called Wanderer, which I absolutely love. I've not gotten a chance to try their product yet. I am an investor, which is called a Accredited Investor, which we'll go over that in a minute because that's very interesting and you need to know this. And I highly recommend if you're thinking about investing in Sweater, you watch this whole video. Is it going to be long? Yes. Is it going to be the most detailed video they have on their Cashmere Fund? Because they don't have any information on their Cashmere Fund other than the names of the company and a quick synopsis online. Is it going to be the most detailed? Yes. We're going to dig into Crunchbase. We're going to dig into web activity. We're going to dig into everything we can about these 5 companies. But like I said, my sweater is from Wanderer, Wander, which is very similar to, say, an Airbnb. But what's really cool is you've got a Tesla inside of your Airbnb, and it's really cool. There's only a couple properties right now. 1, 2, 3, 4, 5, 6, 7, 8. And is it expensive? Yes, it is. Now, this is not part of Sweater, but hey, I always like to say, what is my sweater? So I will show you what my sweater is. And now it's time to get started with, well, Sweater. So if we're getting started with Sweater here, give me just a second. I'm going to turn off my intro. All right, so we're going to get started with Sweater right here. So if we look at Sweater, this is Sweater's main page. We're going to talk about what's in their investment, but I want to show you their main video because this is the main way they're attracting people. This is new. This was not in my last video, which was on No Pants Profits, which will be linked down below, which will explain how Sweater itself works. This video is instead going to focus on the 5 companies that Sweater is going to be invested in first, but this is Sweater's newer promotional video that I haven't seen yet. I've actually watched a couple seconds of it. So let's watch it together and learn how Sweater wants to promote itself.
This is you, and this is a Sweater Party, the future of venture capital. Founders, investors, and everyday people coming together to make something new. Venture capital used to be a private party, but not anymore. And you are...
Stuffing money under my mattress.
No, yeah, don't. Just don't.
What do I do with it? Put it in the bank?
It's basically the same thing. Savings pays less than the rate of inflation. So if you're hiding money, you're losing money.
Dang. Well, what about the stock market? Or crypto? People do those, right?
Those ships have either sailed or they're sinking. And floating again. And sinking.
What does NFT even mean anyway?
No freaking thanks. You do have that friend from high school who's selling financial advice and wants to meet you for lunch.
No freaking thanks.
Why don't you try on Sweater? Sweater combines your investment power with other investors to fuel promising young startups before they even hit the stock market. And as their big ideas become big companies, your investment grows with them. This is called venture capital, and it used to only be accessible to the super rich, like this guy. But now, Sweater's giving that power to you. And with regular folks like you invested in venture capital, it has more power to change the world for regular folks just like you. Choose how much you want to initially invest, and then make smaller monthly investments to grow your shares worth. Our team of analysts and scouts do the footwork of finding companies, measuring their success, and investing in long-term growth. And you can watch it all from the app. So stop waiting. Join the party. We can only change the world if we are all invested. Download the Sweater app and start investing in your future today.
All right, I want to be perfectly clear. I like this company. I like the concept of the company. I like the idea of the company. I like that anybody can invest. I think the minimum investment is $500 if I look at their website. But I'm going to say where they're wrong. Let's be very clear. I think Sweater will be very happy to have feedback. And one of the things that's happened is, if you know anything about the stock market, nobody's IPOing nowadays. They made fun of stocks. They made fun of crypto. They made fun of everything else. This is a safer way to buy into companies like an IPO that's not going to be affected right now as much. It'll still be affected a little bit by the Fed, by craziness in crypto, by craziness in the market, by tweets from Elon Musk. You know, this is a way for VC fund for everybody, and that's what they're saying. But what the heck does that even mean? And again, the logistics, I'm going to go over the logistics of how this works, how you get money in, how you get money out. But I think the most important thing is, if you want to invest in a company before it hits the market, you actually need to be a certain type of thing, which is called an accredited investor. And you might say, what is an accredited investor? So an accredited investor is an individual or business entity that is allowed to trade securities that may not be registered with the financial authorities. Now, what's very nice is Sweater is registered with the financial authorities. They're entitled to privileged access by satisfying at least one requirement regarding their income, net worth, asset size, governance status, or their professional experience. Now, I would say it's very, very likely that most of you watching videos of a guy with no pants are probably not accredited investors, because to be an accredited investor, generally speaking, you have to be a millionaire. Now, there are other ways to go about doing it. You can have a certification that allows you to do it, but generally you have to be in a wealth club where you can take a higher risk. So this is a higher risk, and this can go to zero, just like stocks and other things like that. But what's important about accredited investors is they get access to financial information that others won't get access to. So I want to take a look at this video real quick. I haven't watched it yet, but this is important to understand, because venture capital, or VC, which is pretty much getting into companies before they hit the market, and the normies in the stock market could type in TSLA or AAPL or any of these symbols like that. What happens before? And I think that's important. And we're going to talk about the limitations of that, because it's big. Because if you're not an accredited investor, that's why Sweater actually can't give you that much information here. And we're going to pull out, like pulling teeth, we're going to pull as much information as we can from these 5 companies. But let's take a look at just the video from Investopedia.com.
An accredited investor holds a special status. Under Regulation D, the SEC defines accredited investors as those investors whose level of financial sophistication warrants a reduced need for protection. Essentially, accredited investors are knowledgeable and experienced enough to handle the risk that comes with investing in unregistered securities. Certain securities and private funds can be exempt from SEC regulation as long as they are offered to and bought by accredited investors. Typically, accredited investors are banks, insurance companies, employee benefit plans, trusts, or the right individual. For an individual to become an accredited investor, he must meet one of 3 criteria. He must earn at least $200,000 a year, or $300,000 with his spouse, in each of the past 2 years, and expect to maintain the same income. He must have a net worth exceeding $1 million individually or in combination with his spouse. Or he must be a general partner, executive officer, or combination thereof for the issuer of a security. Employee benefit plans or trusts with assets exceeding $5 million qualify as accredited investors. The benefits of becoming an accredited investor lie in the ability to invest in certain offerings that are not available to common investors. Hedge funds being a prime example. They're complicated and risky, but that risk can mean higher returns. Companies that market their securities to accredited investors have more protection in the form of reduced liability.
So what that's saying is it's straight up saying that, not everyone can do this. And I think Sweater is very honest with that. I mean, even if you take a look, I want to look at some of their earlier videos that kind of give you an idea of, what is Sweater. This is actually another idea. This is another video they ran, but I didn't play it in its entirety. Well, I got that muted. Give me a second. All right, let's try it again.
This is venture capital. It's just rich people getting richer. And this is Jesse. Jesse knew a lot about investing. He helped VC firms turn money into more money. A lot more money. But now he wants to work for you. And that's why he made Sweater, a way for everyone to invest in venture capital. Sweater's team of analysts invests your money in a carefully curated portfolio of smart startups that haven't gone public yet. Sweater reduces the buy-in of venture capital, which is typically millions, to something more realistic. Sweater is the first VC fund for everyone. Sign up now to be first to get access. Join our tight-knit community today.
Yeah, so that's kind of interesting. That's where it's going. There was a sign up as of today, June 15th, 2022. It's open for everybody. But the big thing that you haven't seen any of their promotion videos, or even if you really look on their website, or let's be realistic, so if you look on their website or even look in their app, the name of their first fund is called the Cashmere Fund. I'm going to open up the Sweater app on my iPhone real quick. I'm back. Okay, I'm going to open up the Sweater app on my iPhone real quick, just so you can kind of see. But if I go to my iPhone, let's see the Sweater app. You'll see I've already got 5,000 invested here, which is the equivalent of 252 shares. And those shares, as of right now, June 15, 2022, are worth $20 a piece. It's very important that you watch my other video if you're considering investing, because the important thing is, this is not like the stock market. You can't pull out your shares willy-nilly. If you pull them out early, you pull them out before 2 years, you pay a penalty. But, I mean, if I click on portfolio, oh, look, as of right now, you'll see I've got these 5 stocks. So must have just gone live because this was not here when I looked a few hours ago and I was doing my research. Let's just take a look at what research they have on these companies, and we're going to dig a lot deeper. So, we'll take a look at the research they have on these companies, but essentially they're starting with 5 companies. To explain to you exactly what's going on is you are going to invest money. And what you're going to get is you're going to get a proportional share. So you see my investments, and you have something called the net asset value, and it's going to launch on the 15th. And they have a net asset value price every day. And as more people join, that price will go up. Now, not only as more people join, but as the index and portfolio of companies gets more valuable, if you know anything about venture capital, as it gets more valuable, it's going to cost more to get in on a per share basis. So Sweater's getting into a lot of these companies near the bottom level. I did a bit of research on this, and they're getting in near the bottom level. So I want to see what kind of information Sweater is giving on these companies. You'll see these featured companies. This probably just went live. But we've got Feet, which is a clothing company. I'll be honest with you, this is probably the one I know the least about. You've got another company called Early Bird. I looked at Early Bird earlier. I love it, love it, love it. So Feet is a clothing company most similar to kind of I'm going to be honest with you, a knockoff Lululemon. We'll look at the page. We're going to look at the analytics. We're going to look at things like that, but it's like a knockoff Lululemon. Sorry, I don't really see anything there other than knockoff Lululemon. Early Bird, which is actually awesome. Some of you that might be watching this have been in the finance world for a while. And if you remember back in the day, I'm giving a little summary of what I know they do. Back in the day, you could give your kid or give someone a certificate that was valid for 1 share of stock. Disney, Apple. Okay, I'll tell you that the big one up in the days was Disney. Was people would go, okay, here's a share of Disney stock. And that Disney stock has doubled, tripled, quadrupled. And recently it's gone, Disney stock, so not the best example, but it's a way to actually, and we're going to play the videos from all these companies and show you what makes them unique, but it's a way to buy stocks for your kids, or anybody that's under 17 years old. I tried it with a friend of mine today who acts like a child, and unfortunately, you have to be under 70. You can't be 50-something in order to do this, to use this, and it gets someone started early on investing, and it can be used, unlike college plans, it can be used for anything. So that's what's really cool. And then there's a dark one, I'm not going to lie. After.com, which is a great way to plan your funeral before you need it in Arizona and Utah. So this one's actually interesting because it has geographic restrictions as to where it can be used. And I think the important thing is for now. So it has geographic restrictions on where it can be used for now. After.com. This one's actually pretty cool, and I will tell you, I want to try any of these that are actual products, because I'm going to put some money into this. I can't take this money out for a while, so I got to make sure I like what's going on here. So this is Graza, and it's 2 different kinds of olive oil. one for spread and one for sizzle. So there's some olive oil you cook, and then there's cook with, and there's some olive oil you put on salad. And I'm salad intolerant, so I don't really know much about that. And then this last one of the 5 is called Ganas Ventures, which is a venture capital company. But what I want to do is I want to start with, I'll be honest with you, the one that I like the most. And I come from a financial background, so I like early bird the most. We're going to go over all of these. We're going to dig, we're going to look at web analytics, we're going to look at every piece of information we can, because here's what's interesting. I believe that the information they're going to give here, when I click on early bird, and I've not done this yet, I've done my research personally, but I believe that this is going to be limited because the people that are investing are not qualified investors, so they cannot see privileged financial information. I could be wrong when I click on this right now, but you can't see privileged financial information. I don't believe so, because you're not accredited investors there. So we've got, this is enabling brighter financial futures for the next generation. It's a fintech. Summary: Early Bird is a mobile app focused on, let me pull this, focused on parents opening custodial investment accounts for their kids, offering the ability of friends and family to gift an investment into each child's future. Early Bird is a registered investment advisor, meaning it's all above board, just like Sweater. Sweater is all above board. Background, gives you some background. It is a fintech. Other stats: since launching, it's helped tens of thousands of families invest in their children. But here's what you're going to notice is missing. And we can hit all the hamburger menus and all the everything we want. We don't actually see financial data. If you invest in a normal company, you're going to have an S1 before it IPOs. That's going to give you all the financial data. Now, if you are an accredited investor and you invest in a company, you can generally see that data. That's why I did that setup showing you what an accredited investor was and everything like that. We are going in sort of blind, to be honest with you, into all 5 of these companies, because they're not seeing if you're an accredited investor. So if you are an accredited investor, you have to sign non-disclosure agreements and stuff like that. Very similar, if you're keeping up in the news nowadays, very similar to Elon Musk getting access to a lot of Twitter data. He had to sign a whole bunch of stuff saying he wouldn't go out tweeting all of Twitter's data, even though he has. But good luck suing him. He wouldn't go out tweeting all of Twitter's data. They're going to give him access to private data. What you'll notice is they're kind of asking us if this is all the information we have, and this is on their app and their website, and just for the sake of it, let's read on the bottom. It says, disclosure: investors should carefully consider their investment objectives, risk, charges, and expenses of the fund before investing. This prospectus. So that's all it gives you. Now, just to give them the pure benefit of the doubt, let's go to the website. And if I go to fund, this is called the Cashmere Fund. And I don't think I even have a look at what's inside of the fund, which is kind of interesting. So on their website, unless I log in, which I can't log into the website, I can only log into the app, I don't really have, and you can see you can only get out semi-annually, and there are limitations to when you can get out and how much you can get out. Only 5% of the fund can leave every 6 months. They invest 95% of the money they get in, and they keep 5% aside for people that need to pull out in an emergency. So this is not designed for your day trading self. And the most important thing, when I say day trading self, accredited investor is generally meant to protect people. I know it's the government protecting you, just like you can't day trade with under $25,000. But what you'll see is all the information that I have on this company right here that's it. Sweater is officially open to the public, so I guess it's officially open to the public right now, and this is why it came up. I don't even know if you can get into this, so it's in the fintech industry. But what I want to do is I want to go ahead and I want to dig into each of these companies the best I can. Will this make for a pretty long video? Of course it will. But if you are looking to invest in this fund, I've already put $5,000 in. I'm going to do this research myself, so come along, won't you? So you'll see this is what they sent on June 13th, which was the first time they actually listed the investments. And I will show you I did myself actually buy in before I even knew the companies, because I thought it was such a cool idea. I bought in many days ago. I'm founding member 1633, and they just released 2 days ago the first 5 investments, and there's going to be a lot more, because if you look at all of their marketing material, it says we don't put all of our eggs in one basket. So I think there's going to be a lot more than 5, but you'll see we've got these write-ups, and this is all we really have. Early Bird, a family wealth building platform allowing parents to open custodial investment accounts. Let's go ahead. Let's watch the video. Actually, I'm going to put all these links below, number one, because it's going to help people find this video. And unfortunately, I'm not going to link between all the different things because you really need to understand everything. So let's see if we can find a little bit about it. What I did is I did look it up here on Google Play. Let me see. Early Bird. I have a little video that kind of gives you an idea of what's going on. So let's see if I got the video trailer wanting to play on Early Bird. Gives you an idea of what's going on here.
Hi, Odin.
Hey, buddy.
Hi, Max.
Hi, Taylor.
Hi, Nishu. This is Daddy.
And Mommy.
It's your dad, obviously the greatest dad in the world.
It is November 9th, 2020.
And it's been a weird year.
Starting today, we've decided to give you a little bit of money each month.
It's your first investment account where we can start investing in your future.
Or maybe you're going to travel the world and use this money for a big trip.
Might be school, it might be starting a business.
What better time than now to talk about the future?
Money takes time. Making money takes time. And the earlier you can start, the more discipline you have.
I love you. You're a sweet potato.
I hope that I'm going to be there as a sounding board.
I love you.
We love you, baby.
Love you.
This will be pretty wild to see this in 20 years or whenever you watch it.
Welcome to Early Bird, the first gifting platform that empowers family and friends to collectively invest in the kids you love. It's time to build the nest.
Now, I will say, unfortunately, I don't have a kid under 7, so even though not under 17, so even though I tried to sign up for this, I didn't want to make a fake kid. So I can't see exactly how it works, but I can look at their FAQs and everything like that, and then we're going to delve a little bit deeper into what we can look at. But this is the Early Bird website. Very simply, they make money in a very simple way, and I'm just going to go to FAQs, and I think that's important. I think the most important question when you come into this is, what are the fees? So for parents, they pay $1 a month to keep this account open for their child. And if grandma, grandpa, sister, auntie, you want to have a birthday party and family members want to send some money, there's a $2 processing fee per gift. Now, what's cool is this can actually be done with kids from 0, before birth, to 17 years, 364 days. You can actually do this, and the account can be used for anything. But let's just look. This is something that's interesting. Investment strategy. Okay, so you can't buy individual stocks. It wasn't like my Disney perspective. I was wondering, I wasn't able to sign up. I mean, I was able to sign up, but I didn't have a kid. It all goes into ETFs. So in the future, you may to learn more about specific portfolios. Everything is explained in detail. I have the Early Bird app. Let's see if it lets me actually look at these portfolios without having a child. I'm going to keep this closed for just a second while I see if, oh, cool. Activities, gifts, memories. I have to actually create an account for a kid. So just so you can see on my iPhone, I've got gifts. I can send a gift. I can do memories. I can record a video. I can do an activity feed, but I can't actually see what's invested in, but I'm pretty sure it's just invested in broad market ETFs and different things like that. Yeah, it's a 100% bond-based ETFs. Oh, so you can go from conservative 100% bond-based ETFs to aggressive equity-based ETFs. So that's all it's saying. It's very similar to, what's the name of that one? Wealthfront, actually. And let me just see, Wealthfront. I think that's one from back in the day that I actually used. Yeah. So Wealthfront is kind of like the adult version of this. It's actually kind of interesting. Is what you do is it's automated, and you've got U.S. stocks, foreign stocks, dividend stocks. So as weird as it sounds, imagine a Wealthfront but for kids, for your kid before they can actually have a stock account. And that's really what Early Bird is it's a way to buy a custodial account, which does not, keyword, does not have to be used for college reasons. So most accounts, 529 accounts and different things like that have to be used for college reasons. Some states consider 18, others consider 21 a minor. Yeah, so what's the difference between a custodial account and a 529 plan? Custodial account, the kid gets it when they're 18 or 21, and guess what they can do? They can do whatever the heck they want with the account. Unlike, other things like that, Uniform Gifts of Minors Act. And anybody can put a gift in here of up to 15,000 for your kid. Anybody, doesn't have to be a relative or anything like that. Tax implications. Anybody can put $30,000 into here every year for your kid if they're a married couple, or $15,000 per individual, tax-free. So it's a great way to kind of get your kid started investing before you get your kid started investing. But here's the thing, and then they also have, yes, it's June 15th, 2022, so this is funny as hell right now. They also have crypto, which is brought to you by Gemini. And if any of you know how I feel about Gemini, I don't like Gemini, because they asked me why I'm putting money into and taking out of crypto, and they locked my account. Long story, no Gouda. But, you know, if you claim early access, you can get $75 for your child's wallet. I don't believe crypto's dead, but I don't think now's the right time. I think we've got more to a bottom. But this video is not about crypto. Now, you see you got blog, FAQ. It's a pretty simple, easy thing. So make a portfolio. You can deposit. So if I hit send a gift, I can hit send investment. And I can choose an occasion. Let's say it's little Billy's birthday. And I say I want to give Billy $50 for his birthday. Well, let's use even numbers. It's saying in 18 years that $100 is going to be worth $285. So it's going to make 185%. Now, what I find interesting, take this feedback as you will, early bird, on this page, there are no disclosures as to how that's calculated. Not a fan. Or I can let's give him the maximum amount. It has to be below 2,500 in a single gift. So 2,500, and if I hit next, then I give Billy his information, and then I can actually drop an image or a video there, because the goal is so Billy can go back and look on who gave him this, and it's really, really cool. This is probably my favorite one, because I want people to get started investing sooner rather than later. I had a friend who I gave some Bitcoin to, and he rightfully so cashed out of the Bitcoin, but I gave him some Bitcoin as an investment. I want people to see things as an investment. Personally, hell, I would love to have this for people that are over 17 years, 364 days old. But what we're looking at right now is kind of publicly available information. I want to look at a little more publicly available information, and then we're going to dig into some interesting stuff. So, early bird. I want to look at their YouTube. Nope. Early bird. Oh, hold on. I'm looking at their YouTube, and there doesn't seem to be anything. Let's see. Yeah, there's like no YouTube there, which is kind of interesting, because I always like to look how companies kind of promote themselves and everything like that. Financial empowerment, all these other things. I can put my phone number to download the app. They have a Facebook, they have a Twitter, they have an Instagram. Again, I like to look at how these companies represent themselves. So if we look at their Twitter, they've got about 1,600 followers on Twitter. Now, are they replying publicly on Twitter? Yeah, they are. It's actually awesome. Pretty cool video there. Okay, yeah. Pretty active. I like that. You like to see that. They got someone that understands social media, which I'm totally cool with. Love that. And there's a lot of other venture companies around there, which is kind of interesting. They don't have so they also have an Instagram, which is pretty active. Again, I'm not one to look for investment advice on Instagram. And then if we look at their early bird in the App Store, they've got 4.1 stars, 200 reviews. And what I think is interesting is every single negative review. This is important. This tells you a lot about a company. Every single negative review is responded to and handled. I find that to be very, 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 very good. Every single one, people say we're not clear that there's a $1 fee, everything like that. They could probably make that a little more upfront. And I do want to show you that it is very similar on the iPhone side. So I'm going to show you on the iPhone side as well. We got the Early Bird app, and you'll see the bad reviews. Well, I don't know if there are a lot of bad reviews on iPhone. I saw the bad reviews on Android here. Let's see all. But I believe they probably responded. Oh, it's all really good reviews on iPhone. Okay, bad app. And here's what's important: the developer has responded. The company is responsive to their customers. They have an awesome product. They're responsive to their customers. That's digging into the company, but where the heck can we figure out about the financials? So there are two places that we can figure out about the financials, even though they're not being disclosed to us. One of them is called Crunchbase. And what Crunchbase does is Crunchbase looks at startup companies, early companies, and you can search them. Now, Crunchbase is not, keyword, Crunchbase is not free. Crunchbase costs money to use. Richie might have gotten a trial, taken a look. Highly recommend if you get a trial, you want to take a look at some companies that are in the pre-IPO stage. This is going to tell you about them. I'm going to share this with you. Who knows if they're going to cut me off for misusing this, but I want to share it with you. And they are in the, this does tell you about companies before they launch. Now, this is considered privileged information. You don't have to be a qualified investor to sign up or anything like that. But I am going to share this with you, and this is going to give us a lot more information on Early Bird. And then, so we're going to take a look again. We're going to look at Crunchbase.com, which is a subscription service. And then we're going to take a look at which we're going to look at SimilarWeb, which is similar to a web ranking service. If you've used Google Analytics before, YouTube Analytics before, anything like that, it kind of shows you how much traffic the site gets, if it's going up, if it's going down, if it's going left, if it's going right, how it compares to its peers, and everything like that. So let's go ahead and let's jump into Crunchbase first. We're going to take a look at this company. I'm not going to give you as much of an intro to these tools. We're just going to jump into them for the remaining 4 companies after this. But let's jump into Crunchbase. So we're going to look at Early Bird. LYBIRD. Early Bird. Early Bird is empowering. Okay, so here's what's cool. This will give us the amount of money that is already invested. Now, I want to be very, very, very clear. This is not something that they give you in the Sweater app. This is information that will show us funding rounds, will show us everything like that. It's not going to show us everything, but it's going to give us a much better picture of what's going on. So my free trial for Crunchbase ends in 6 days. Oh, I'm going to need a lot of free trials. So what's really cool is I can actually look at, okay, we're going to be investing, as you watching this, as you Sweater users, as you investors of the Cashmere Fund, and we can see they've already funded in $7.1 million. And we can see where they brought it in. So before they went searching for money, they got $665,000. That is their pre-seed round. So before they really went out asking for money, friends, families, employees, things like that. So money raised there. And you could see they just raised, well, not just, we'll take a look when. We should see if we can see the rounds. They got another $6.4 million in their first round of funding. So it's likely that the Sweater Face is going to be investing in either the seed round, if it's still ongoing. Not really sure. It looks like the last funding was raised November 22nd, 2021 from a seed round. So what we're probably looking at now, it kind of goes pre-seed, seed, there could be another seed, then you have Series A and Series B. So what it looks like is, it looks like as Sweater users of the Cashmere Fund, we're going to be investing in the Series B. So they're not going to put in 7.1. We're going to get a pretty big, there's $7.1 million invested. We're going to get a pretty nice chunk right there. So you see 665, then they did 3.1. Then they raised again to 7.1. Oh, here we go. So this gives you seed round. So they've done 2 seed rounds. They did one in 2020 and one in 2021. The number of investors, let's see. We can see everything that's raised. The lead investor, well, okay. I said a word that sounded like SIRI. And we can see these different investor funds. We can look, there's 11 total investors. And we can see all these investors here. So you can see most active investors. And you can see, so Alexis Ohan, I like him. And you can do all this digging here and kind of see who's there. And what's going to happen is, eventually, there's going to be this thing called Sweater that's going to pop up right there. But what we can see is we can kind of see financials. We can see who's there. So we've got the co-founder, we've got the head of product design. This is a great way to research a company. What technology is on their websites? Oh, well, hell, look at this. We got all this. So we might not even need to go over to our second tool, but we will. You can see their monthly visits have shrunk. So actually, we don't even need to look at their website. We can look at their engagement, the amount of time they spend on their site. Ooh, I really like this. I've never actually used this before. We're doing this in real time. Bounce rate is the number of people who hit their front page and don't click on anything. So you'll see if I just go to getearlybird.io, if I don't click on anything and I just go away, that's considered a bounce rate, and you'll see that 83.76% of people bounced right off of that page. I don't have the premium stuff, but what's interesting, you can see that they're spending more time on the site. Now, I don't think this is respective of really what's going on, because what I think is I think a lot of what's being done is in the app. We've got signals and news. Again, there's not been much news on this company in, 9 months. So it's time for a baby. So this could be another seed round. This could be a B round in similar companies. Canadian Yield Protocol. So it doesn't look like there's anything really similar in the space that's doing what they're doing, which is super duper 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 unique. I like it. I love it. Just for fun to see if we need to do this again. So earlybird.io. So this is another tool. And if I go ahead and I look in, I go, I want to look at Earlybird. I could do some web research. Use a getearlybird.io. Okay, perfect. So let's axe these other ones. I've put them all here so we can take a look. I did a little bit of research beforehand, but you'll see traffic and engagement. You'll see that it is actually, well, that didn't like me. I'm not sure what's going on there. Let's just try this. Similarweb.com. Forbidden. Weird. Okay. I don't know if I just get kicked out of SimilarWeb, but we'll go back to it later. But I think we've gotten a lot of it off of Crunchbase when it comes to technology. So you'll see their monthly visits have declined. They are ranked the 584,635th website globally based on 75,962 monthly visitors. So we can get that right there. Overall, Early Bird, they've got a good Twitter. They've got good responsiveness. It's a good everything like that. I'm going to give that a major, major, major yes. They've only got 7.1 million in the piggy, according to Crunchbase. They've got a solid business foundation. I really, really like it. I give that 2 thumbs up. And where are we going next? Well, there's 2 things you can't escape. Be honest with you. In life, there's 2 things you can't escape. And one of them, they say, is taxes. I've filed for an extension, filed for an extension, filed for extension. Still haven't gotten around to fully finishing my taxes because I've got crypto and that's a mess. But the other thing you can't escape is death. So, like Beetlejuice says, welcome to a show about death. So this is called After. It has a great domain, which is after.com, which is like the best domain ever. So kind of interesting that we've got that domain there. Oh, okay. Simple web platform. Oh, look. We're back. We'll go back to that. I got this back on. Hold on. Before we go to After, I apologize. It looked like that website just literally went down. We were looking at earlybird.io. So we can see the total visits for for March to May, device distribution, global rank, country rank. So it's actually ranked a little bit higher than we were seeing on Crunchbase. So you'll see monthly visits. You'll see they're ranking it at 584,000 in the US. This site, which I actually trust a little bit more, which is SimilarWeb, you can see monthly visits, monthly unique visitors. So there's 36,000 unique people going. But if you do look, it is falling. The interest in it is falling. But I do like the company, but you know their web traffic's falling. But most people find them via organic search. They're not paying to see their branded versus non-branded organic search terms. People are looking for a crypto mutual fund, UTMA tax rules for 2021, UGMA versus UTMA, so the different savings plans, early bird investment, top referring websites. So there's a bunch of different. Lastingthedistance.com is a romantic advice blog. Weird. Their top destination links, outgoing traffic, going to the IRS. And they get a lot of traction from YouTube. So they may be paying people to kind of advertise their service on YouTube, mommy blogs and things like that. So really quite cool. You can really dig into these companies, but let's go back to death. So again, taxes and death, the thing you can't avoid. So After.com is the second company we're going to talk about that is in the Cashmere Fund. After.com is an end-of-life software experience focusing on providing alternative afterlife products and services such as cremation. 230 plus families served, so it's not big, but it's growing. In Q1 2022, they did they did in Q1 half of what they did in 2021. They are in the industry of funeral services. Most people don't think about investing in the funeral service in this industry, but it's great. We want to read the summary that's being given by Sweater, and then we want to dig into their website. We want to look at Crunchbase. We want to look at different things like that. We want to discuss if we're in a good financial position as investors to enter this. Again, since you are not an accredited investor, Sweater can't share this information with you, but guess what? I can, because I'm just finding it out myself, and I'm sharing it with you. And I'm planning to do this for every single investment that Sweater does, because I think I'm going to be one of the other people doing it. So it's kind of cool. Background: when someone passes away, family members, hospice care currently have to deal with frustrating funeral expenses. I will tell you, I've had people die recently. Just natural death. None of this crazy stuff that's been going on in the world. Just natural death. After.com saves customers on average $2,600 with transparent pricing and getting you invested fast. Every one of Sweater's members has or will experience end-of-life process for a loved one. I was saying for themselves. They're leaving the $27 billion traditional funeral industry behind. Customers want a simple. And you can see, again, grew to 2 markets. We'll talk about that. Launching multiple markets in 2022. One aftercare specialist can serve 5 times the number of families that a traditional funeral director can. So what they're saying is they're more efficient, which I love efficiency. I'm a guy that loves efficiency. So here's what I want to do. Let's go to After's website, which I think is a great website. Very clear, very simple to understand. Not even that. It's the simplest damn website in the world. It's just After.com. Simplicity when you need it most. How does After's create? So all they do is they burn your body. Now I will tell you, I am Jewish, and being Jewish, I know that many Jews cannot get burned, cannot get cremated, so they have to be buried. So this is not really for Jewish deaths. We bring your love. Now, they say it in such a pleasant way. I always love how funeral directors and funeral companies do things. Simplicity when you need it most, and it's got 2 different phone numbers, so you don't actually need to do it over the app. You can actually ring, and you can do this with them, and it's only right now in Arizona and Utah. They will bring your loved one into their care. They'll perform the cremation, and the cremated remains will be delivered to you via a local courier or postal mail with tracking. And the whole idea of this is it's one price. They take the body. This is a weird thing. We go from talking about kids at birth. Kids at birth is in this fund, and getting them set up for investment, and then we follow it all the way to death. And then we're going to look at all the stuff in the middle. Weird. Taking your loved one into our care, secure storage, cremation, delivery of cremated remains, all necessary paperwork and fees. The only decision you need to make is the number of death certificates you need. So let's take a look at what kind of money they make, or how they make money. We've got Arizona and Utah. You see, save an average of $2,500. Oh, Siri.
Okay,
cool. Save an average. I can't say anything with an S word. Save an average of $2,500 compared to traditional funeral homes for similar services. So they have 2 packages. They have the skinny people package and the fat people package. And you might say, hey, Rich, why they got one for the skinny people and why they got one for the fat people? Well, because they need 2 people to carry the fat person, and they only need 1 person to carry the skinny one. That's true. I've read their FAQs. It's funny, but it's true. So what's included? So for the $700 package, let's call it the $700 and the $900 package. For the $700 package, you can get transportation of a dead body under 200 pounds, secure storage, cremation container for someone under 250 pounds, obtain permits and filing, honorable cremation, an urn, local delivery of cremains, 1 death certificate copy, and the obituary listing. And then this one's for the fatties. The fatties cost $200 more. So I would be in the fatty plan. So it costs me $900 to get me burned and buried. And you got a price match guarantee. If you find similar services that cost less, we'll match the price. It's like Best Buy. Transportation, there's no weight limit. So if you're fat, you got to go with the fatty plan. And no weight limit on there. And you get, selection from 5 quality urns. Ooh. Look at this. We've got the classic alloy urn with the American flag. We've got the modern rosewood urn. The circle of... Really? Circle of Life. What do you think this is? Disney? It's the Circle of Life urn. And you can select a classic alloy urn. And I can't believe I'm about to do what I'm going to do, but I want to see how much that classic alloy urn American flag. Oh my God. American. Why am I doing this? Okay, so urns are like $150. I'm not finding the same exact urn, but urns are like 100. Oh, is that it? Yeah. There's some cheaper urns or thermoses, but you know, urns are urns, and that's what we got. So let's go ahead, and this gets you, again, no weight limit. You get more death certificates. You get a fingerprint service by Legacy Touch. I will show you what that is. I'm not sure exactly what you get there, but again, I like to explain exactly what's going on the best I can, but it looks like Legacy Touch does fingerprint jewelry and keepsakes, so they will take your fingerprint and probably send it to Legacy Touch. They probably won't pay for the jewelry, or maybe you get like a little charm bracelet that's got a fingerprint in it. It's pretty weird. Not gonna lie, but hey. But that's the idea, and they service the Phoenix, Mesa, Chandler, Scottsdale, Glendale, and surrounding areas. So the big areas, now that's in Arizona, and in Utah, probably Salt Lake, Davis County, Salt Lake County, Summit County, Utah County, Wasatch County, and Weber County, and that one's a lot more for the fatties. And why hey, I can make fatty jokes, you know? I can make fatty jokes because I'm a fatty. I need the expensive package, so I get a pass on making fatty jokes. Okay, back to this. FAQ. Why do fat people cost more? How long does the cremation process take? These are some simple FAQs. Why does the location of my loved one... Okay, why are you asking me about the weight of my loved one? We ask about the weight to ensure we have the appropriate number of staff for transport. Our priority is to safely bring your loved one into our care. If you're too fat, we need 2 people to do it. Now, how they're saving money is because they're not embalming, they're not doing showings, they're not doing anything like that. Essentially, this is burn and earn. Very simple. After.com, burn and earn. That's what they do. But it's a very interesting concept. It's taking an industry that's ripe for innovation, and what the hell is it doing? It's innovating. I love it. You love to see when you take something that's ripe for innovation and you innovate the hell out of it. So let's go ahead and let's look at After.com on Crunchbase. I expect this to be remarkably smaller. Why do I expect it to be remarkably smaller? It's only in 2 states. There's been a total funding of $1 million. This is juicy, because we're going to get a nice chunk of that pie as Cashmere Fund and sweater people. So it's in the pre-seed. So this getting in early. I love it. I love it. I love it. And we can see it's literally been funded by one company. And this one company has done 30 investments. Let's see. We're going to dig a little bit deeper. I want to see who they've invested in. Anything we've heard of. We're going to jump back and look at other numbers. Prezi. Prezi is an online presentation software. Again, this is not After.com, but this is the only investor in After.com invested in Prezi, not Plezi. Prezi. And I'm just looking at what I've used before. And that's the only one that PayHippo I've used before. But just to give you an idea, let's jump back. I want to figure out as much as we can. Number of funding rounds 1. We are getting in super early as sweater people, and we may actually, you know, have a nice chunk of that total funding amount pool, which is a really cool. And you see, hey, look, I got my recently viewed down there, so I think they're all going to show up. We've got our people. Let's go LinkedIn. Kind of interested. I want to look at the I want to look at this LinkedIn guy if I can. Ugh. I don't want a pro trial. Push the Salesforce. No. I just want... Let's just put him in. And that's after. We're just going to find him real quick. Okay. So we got the founder. Wants me to log in. Hate you, YouTube. Hate you there. We're not going to log in right now. So, yeah, that's the thing. But we got these people there serving families. Okay, After.com has 2 current employees. CEO rank. We can see all these different things like that. Technology. So, what's interesting is we don't have any actual web data here on this site. But again, this is super early. So let's see if we can find After.com. Because why not? After.com. Okay. So this is right now on SimilarWeb. And we could see, God, there's a lot of interest, a lot of movement, a huge amount of movement here. It's actually ranked a little bit higher than our other one was. You know what? Just because we can. Let's go ahead. What was the name of that first one? Trying to remember the name of the first company. That is Early Bird, sorry. I got a lot of tabs open, and I apologize for that. Okay. BIRD. Early Bird. We're just going to click there. We're going to do our simple Google search because that's not Crunchbase. That's not going to give us just startups. Okay, get Early Bird. And what's cool is we can actually compare these two and see where they lie in the rank. So After.com is actually ranked higher in web traffic than Get Early Bird, and Get Early Bird is nationwide, and After is in 2 states just in the metropolitan area. So, and you can see, but the total number of visits to Get Early Bird are very, very different. So just based on country rank in the US, it's kind of interesting that it ranks different. What's interesting is the majority of people on After are actually going for mobile devices, but nothing super crazy. But we're looking at both of these. And you'll see Get Early Bird gets more visits, but a visitor goes back to After.com an average of 1.8 times each, and they spend a significantly longer time on the website, likely reading why fat people cost more money. And you'll see Get Early Bird has a bounce rate, meaning that people bounce a lot less, don't go on the main page. You'll see the traffic over time is less, but it is... After is going up, so you'll see there's a major difference in the curve. Blue is After, and orange is Early Bird. Again, we're going to have a majority of people for Early Bird are from the United States, and from everywhere is from the United States, because you can only get it there. And you'll see marketing channels, so organic search, direct. They're not doing paid search or anything like that, so that's not a big thing. So one of the big things in the startup industry, I'll teach you a term right now. Actually, let's see if a video could teach it, because I need a little break. Let's see. It's called customer acquisition cost. Let's just see. CUSTOMERACCQSITION. Let's see if we can get a customer acquisition cost explained. Okay. So I think this is interesting. This is going to be a good video. It's going to give me a chance to catch my breath after 52 minutes. I think it should give us a good idea. So let's take a look here at customer acquisition costs, because this is important. I'm not just pushing you off to a video. I actually want to show you, because you'll see that this is mostly being done over social media and over direct things, but not over paid search. Now, I guarantee you After is actually doing quite a bit more paid search, because they're competing with the funeral industry, the traditional bad boy funeral industry in Utah and in Arizona. So in competing with them in Utah and Arizona, it's a different animal. So let's go ahead. Let's just look at customer acquisition costs, because this is going to come into play a little bit later on. And I apologize for the long video, but I want to do the best job I can.
So let's assume I'm using Google AdWords, and I'm paying 50 cents for pay per click. Now let's assume my campaign at 50 cents each gets me 10,000 people to come look at my website. Well, 50 cents times 10,000, that cost me $5,000. But the goal isn't to just have people visit. The goal is to get them to the end of the funnel. And at the end of the funnel, I want them to actually have paid for and or used the product. So the goal is to activate them. Now what's interesting is assume I'm offering a trial, and assume that maybe just 5% of the people who I've acquired actually now take the trial. And so I now have 500 people using my freemium product. But the goal is not to just have them use a freemium product. The goal is to actually have them pay for it. And what's interesting is assume 10% of those now actually pay. So I'd start with 10,000 people who came to my site. I spent $5,000 for them. 500 people took a trial of the product, and 50, only 50, actually paid for the full version of the product. So while 10,000 people look great for $5,000 because it only cost me 50 cents per person, if we now do the math, we can now see it cost me $100 to acquire one paying customer. That $100 equals my customer acquisition cost. I use this example for a web mobile channel, but it's similar for a physical channel. You might not be doing pay-per-click, you might be doing direct mail math, or you might be doing television or radio math, but the math works the same. How much did it cost to acquire a customer? How much did the campaign cost? How much did it cost to get them to consider your product? How much did it cost them to take a test drive of your car or fly your airline? And what, in the end, was your customer acquisition cost? That's a key number for any founder thinking about a startup.
I think that is a fantastic video. I love that video, and you might say, well, that doesn't really matter much, and the key word is yet. But I'm showing this because it's going to matter a lot for our next product, which is the one that I'm the least excited about in this stack of 5. Well, maybe the second least excited about in this stack of 5, but you'll see that there's not a big paid search. There's a little bit of a paid search there, and After.com is, so Get Early does not have any paid search traffic, but After.com likely has some paid search traffic, because what are they doing? They're buying search against funeral in Phoenix, funeral in Salt Lake City. They're buying search ads against those different ones, and we can even see what they're paying per click. So they're paying for, this seems to be After.com is actually buying the term crypto mutual fund, and for every time someone searches the term crypto mutual fund, and let's do it just so you can see how this works. Let's see if After.com comes up. No. So there must be a lot of people oh, that's a Brave search. Like, why isn't that working? Let's try here. Nobody's buying a Brave search engine. So I Trust Capital, Lincoln. Let's just put in child, just for fun. And no, we don't actually have anything for crypto mutual fund. Kid. So we don't actually have any paid ads there for that, but at one point they were actually paying $6.75 per click. I'm going to show you that with our next company, mortuary cremation channel. Oh, okay, cool. So we can see cost of cremation. We can kind of see how people are finding these two companies. So this is how they are finding it. That, and again, oh my God, perfect example. We were talking about cost, customer acquisition cost. They have to pay $23 per click for cremation, Glendale, Arizona. Let's see how that works. Cremation Society of America. But so they're paying against the funeral homes, and the funeral homes are probably paying more. So you know what? Since we're an investor right now, let's go. Boom, boom, boom. We've now opened 3 competitors, and in opening 3 competitors, we've probably cost them about $23 each. Sorry, that is a big one. We opened 3 competitors, it cost them about $23 each. So, back to this. This is customer acquisition cost is very interesting. Social traffic. There's a lot of stuff from YouTube for Get Early and for After.com, but I want to look at the next company. And the next company on our thing is the one that I'm the least familiar with because I just wear Hawaiian shirts. So, and no pants. I'm wearing a sweater today, but no, there we go. We got a Hawaiian shirt and no pants, so I'm not going to be buying athleisure wear. because that's the next category. And this is a company called Feet, not F-E-E-T, F-E-A-T, but it still sounds like feet. See? So Feet. So this is the third part of the fund we're going to talk about. Feet's products are amazingly impressive and beloved by their loyal customer base and are quickly going mainstream. 180% targeted revenue growth for 2022. Net zero carbon footprint for 2022. Yeah, because they just buy carbon credits from other people. Industry apparel. So we're in our third industry. We went from fintech to death to apparel in the Cashmere Fund. Pandemic has not only changed the way we work, it's changed the way we draw. I get it now. I get it. Oh, I'm starting to like this company now. Remember I said I know nothing about this? This is so you can wear your underwear to work. That's what this is. This is giving you stuff that looks professional that feels like underwear. Okay. You just said bing, and watched the light bulb go off. Feet clothing is... The pandemic not only changed the way we work, it changed the way we dress. Feet clothing is a high-end brand designed at the intersection of comfort loungewear, performance activewear, yet styled for the office. So you can be on Zoom calls from here up. No Pants might actually need some feet. Because he doesn't wear pants. Taylor pioneers in e-commerce. This is an influencer marketing play. The pandemic not only changed the way we work, it changed the way we dress. Months of constantly wearing comfy clothes at home gave customers the taste and comfort we want in every part of life. And even after we go back to the office, this is a way you can wear fancy-ass PJs to your office. And I love it. I went from hating this to loving this in seconds. It's something you can only see live. I love it. Feet's products are amazingly impressive, beloved by their loyal customer base, and are quickly going mainstream. Massive direct-to-customer growth over the past several years, and we'll be using this investment to enter wholesale relationships with retail stores. Love it, love it, love it. Oh, look how things change. And they have current collaborators, which we'll see on their website. I went to their website. Global influencers. They have Instagram following of 37 million people given their influencers. Again, the only piece of data we're getting right here, and that's important to know, is net zero environmental impact in 2022 and 180% target revenue growth. Let's dig deeper. Love to dig deeper. Okay, so we're going to dig deeper. So let's click on the Cashmere Fund. After cremation. Oh, we got all kinds of buttons here. Here we go. All right. So feet. Let's talk about feet. I didn't like this at first, and now I love it. Some things happen. They make you go, We started in 2015 with an idea to make clothing we love incredibly comfortable, and then the C word happened. This is all it is. Oh my God, I love it so much. I hated this. This is the one I hated. I love it so much. The other weird thing I found is they actually have a warranty. I saw their warranty, which was kind of cool. So you've got a warranty. I found that on one of the pages. You got a 2-year warranty. And, people ask, what's the compositions of fabrics? What size should I get? Other things like that. Hey, I'm not a clothing guy. I am not a clothing guy. I buy $2 shirts in the Caribbean. People say, are you just dressing funny? I go, no, I like it for comfort. I sweat a lot. I'm wearing a damn sweater right now. They have they have SMS support. They have everything like that. Who we are. I like it. A sustainable future. Very green. But the best thing is that their goal is to make going back to the office, for people that have to go to the office, feel like they're still wearing their underwear at home. Now, when I opened this up on my laptop, I'm on my desktop now, I did get like 15% off coupon code, craziness like that. So I do think there's going to be a call to action on this site that's going to say coupon code, different things like that. But you'll see feet. This is definitely competing with Lululemon. So imagine if you take Lululemon, and I am not one, look, I'm not one that really understands what's going on here, to be perfectly honest. Let's look at the feet collabs. But I am not a fashionista. But if you take Lululemon and you combine it with what people were doing during the pandemic, this is the idea. And we've got different people that are influencers. Let's just see who this person is. Helen Owen, Instagram. Oh, I want to copy the text. Copy. Whoop. So she is one of the people that promotes booking Helen Owen. So the idea is that, and I think I get the idea here. The whole idea is that they wear the clothes, they tag the clothes, and then you could see that they're wearing these different clothes like that. Let's see if we can find edit Zermatt nails again. Oh, X feet. X feet. Give me just a second. I'll try and log into my Facebook so we can kind of see a little bit more of what's going on here. But yes, that's the idea there. The idea is very unique, very interesting of what's going on there. Sorry about that. Just need to log into Facebook. Think of my password real quick. I will save that password, and I have a two-factor authentication. This is, unfortunately, there's no two-factor authentication companies here yet in the Cashmere Fund, but if you don't have two-factor authentication on every single device and every single thing you have, then you should. Let me put in that two-factor authentication code. I'm going to save that browser, and then hopefully we can find that woman. Okay, here we go. We're in! Maybe. Yes, okay. I'm now logged into Instagram, and now I can see this person's reels. So let's go ahead. I'm going to copy her over again. What was her name? Let's jump right here. Put in Helen Owen. And we're going to see she gets paid to actually do this. And what we should be able to see, here's what's interesting that I want to be able to see, is we've clicked on her feet. We want to see her feet. So this is her repping her feet sweat set. Oh, look, feet, yeah, from Fabletics. Okay, so this is showing you who they're with. I mean, let's click back. Fabletics is Kate Hudson's knockoff on Lululemon. And feet, so that'll be interesting. We're going to look at Fabletics when we look at the analytics. So, I got to my feet. Oh, she loves her feet. So this is how feet is, let's just see if they've recently used her. 42 weeks ago, that's still like a year ago. I can't believe I'm looking at Instagram for an investment post, but hey, this is what they do. Do I really want to hear her voice?
Planning a giveaway right now with the Feet team. We're going to do a big giveaway this Friday.
So you might say, I'm sure you're all saying, hey, Rich, why the heck are you looking at Instagram? Because here's what they're doing. They're making promises on their website that these people are promoting them. So I want to see if any of them are promoting them recently. I think that's very, very, very important. Some of you might say I'm crazy, and you know what? I would totally agree with you. But let's see if someone's promoting feet. Brands. Okay, so that's her brands folder. Let's see if there's a separate feet folder. Because this is how this company's making money, and it factors into, if you remember, customer acquisition cost. Essentially, they are paying these people per traffic that they drive to their website, and that traffic they drive to their website, they're paying them off, and there's a cost. We're looking for some feet. We're 31 weeks ago, looking for feet. I don't see any feet. It seems to be the person. Brands. Wait. Who was wearing that feet? Nope. Coral orange. Not from feet. This is what you call influencer marketing. Is she really advertising barbecue sauce here? Interesting, because we're going to a condiment next. But I'm looking for any feet. Yes, strappy sandal, dress. Unless this is very recent, I don't see any feet. Yep, I don't see any feet. Maybe this was just my excuse to take a break an hour and 10 minutes into the video and look at some pictures of women, but I don't think so. So the idea is it does not seem like she has any feet photos. Let's just click on something that looks like it might be from feet. Maybe that might be from feet. Piranha and Sorel footwear. Again, I'm just looking similar to what feet. Ah, look. There we go. We found her feet. So she got paid a lot of money to actually put this up. And this was done, when was it? Okay, so this is recent. This is recent. Recent in investing speak, about 6 months ago. And I want to look at the last one because I want to see how recent these things actually are, because they're still advertising these as their selections, investments, other stuff like that. What? Let's get her name. Jana Kramer. Huh. I do love the new Mac software where you can copy things from an image. It's beautiful. Let's see Jana Kramer and feet, and then we're going to look at Crunchbase, and we're going to look at web traffic. Amazon, Codes, One Brick, Lulu, Simon, Vlog, Jody, Fashion. Oh, that looks like feet right there. Nope, Splendidita. So, no feet. But also, this is a long time ago. I don't care what's happening a long time ago. I care what's happening now. Wow. No feet. Feet. I'm just guessing what looks like feet. White. Oh, she's a White Claw girl. Oh, God. I don't understand any of this. Hellrising, Happy Easter. I could be clicking on the totally wrong thing, but I'm looking at feet. Yes, feet. We found her feet. So this is where your customer acquisition cost comes into play. Why? Because what they're doing is they're paying for these influencers to drive traffic. And the cool thing is we're going to see how much traffic these influencers are driving, because we're going to see a whole bunch of Instagram traffic. But let's go again. We're looking at feet again. It's Lululemon. There's nothing crazy here, but it's also Fabletics. I think it's closer to a Fabletic. They have some trademarks and different things like that. But let's go ahead and let's look at Crunchbase, F-E-A-T. Feet clothing, the most comfortable athleisure clothing in the world. Wow. Also, like, no money into this, which means we're getting in super duper early. I like it. There's almost no money in here. Now, it raised money a long time ago, so it might have been self-sustaining for a while. But if we're looking at Crunchbase, feet clothing, been around for a while. This all matches up. This is the right feet. Last funding type was seed, so they're still not in the Series A. They're still in the Series B. Estimated revenue range, less than 1 million. Interesting. I like it. Let's take a look who funded them. Two funding rounds. Total amount they raised was $1.3 million. Who funded them? They have not said who funded them. So they kind of kept that private, but you can see they've only had $1.3 million in funding. And if we take a look, we can look at website traffic. So they're getting 50,000 monthly visits, and it's growing month over month, because guess what? You gotta go back to the office. You can't work at home anymore, because your evil boss wants to see your face, and that's what's going down. So you got to go back to the office. This is going to grow huge, especially in California, where this is from. Is the people working at Apple, working at Google, working at the Amazon branches there. All these tech companies are going to have to go back to the office. They're going to start wearing feet. Love it. But let's go ahead. I want to look at this on its own because I think that'll be interesting. So let's just copy feetclothing.com, because what we're going to look at now is we're going to look at web traffic. Again, remember, we can't see, very important, we can't actually see all of the information because I am an accredited investor, but they're not targeting accredited investors here, so they can't put financial information just on the main page of that app. So we have to dig and we have to find that information ourselves. And my credit to you is, look, I've made a long hour and 20, probably hour and 40 minute video by the end of this, maybe 2-hour video by the end of this. If you watch this, I will make them. Hopefully just one company at a time in the future, but I want to have this ready. And God, look, we got a lot of movement. This is the highest ranked of all the apps. Global, of all the companies so far, this is the highest rank. We're gonna take a nice picture at all of them at the end. Bounce rate is super low. People are clicking around. Monthly unique visitors is 23,000. And look at that graph. Holy crap, I love it, I love it, I love it, I love it, I love it. It's not often that I will say I love it. And you heard, I was not excited about this company. But right now, hey, if I had to go back to an office, I would wear some athleisure wear too. Traffic shares down a little bit. Countries, but here's the important thing. Here's where we start getting important. We've got different marketing channels. So direct, email, referrals, social. This has the biggest social. You'll notice that everything was either an organic search or direct search with the other companies. And we'll pull them up again. I'm going to put them all in a row at the end so you can see. But social, that's what's driving the traffic, is this influencer stuff. Branded versus non-branded. Top organic search term, feet clothing, feet Brody Jenner. Maybe that's Brody Jenner. I don't even know. I'm not hip on those things. Please comment below if you've got anything to say about this. Comment below. But we'll see top referring websites, computers, electronics, agencies, leisure craft. Weird. Kind of seems to be a categorized mistake. Top link destinations. 30% of people are leaving there. So their conversion rate is probably about 30% of the people that get to that site. So that's kind of cool. You'll see they've got these influencers on Facebook too. I think the Instagram stuff is being mistakenly done as Facebook, because I don't think this is on Facebook. This doesn't seem like a Facebook type company. And it looks like all these Instagrammers are doing all those things there. It's really, really, really unique. But what's happening is I saw that they're actually buying a lot of ads, and in buying those search terms, they are spending a lot of money on search revenue. So I think that's kind of an interesting one. So Google Display Network, they're getting a lot of. Let's see if we can get that ongoing ads, top ad destinations, referring industries, leggings.com. Oh, here we go. See more search terms. So here's what they're paying. This is the cost per click that they're paying for search terms. So just to type in, I just want to show you this. Please don't do this yourself, because you're going to be an investor, hopefully. Feet. I'm not sure how I angry turned on cap locks, but, oh, we're going to go to Google. Sorry, nobody is. I'm a Brave user. Still cap lock. You see that ad that says feet clothing? Clicking on that ad that says feet clothing on that search term is actually costing them money. And that's the reason I showed you that video. The reason I showed you that video has to do with customer acquisition cost. So customer acquisition cost, super duper important. You got to understand that it's costing them a boatload of money to get customers. And that's why if you look at their website, damn sweaters are $118. A pair of shorts are $64. I don't think myself has ever paid more than $25 for a pair of shorts. So I could buy almost 3 pairs of shorts for what they sell one of their shorts for. Yeah, I'm not fashionable. I'm the guy wearing no pants and a jacket and a sweater from a company I invested in. Sweater, get me my sweater. Sweater? I want a sweater. So I mean, we can look. They have to charge that, because that's what it's costing to get a customer and get them through the purchasing process. One more thing I want to look at. I want to compare this to F-A-B-L-E, Fabletics. So that is Kate Hudson's site. Oh, I want to go back. That is it. So let's go for feet and Fabletics. And you'll see Fabletics rate's a little higher, but this could be the next Fabletics. Fabletics is Kate Hudson's version of Lululemon, and what's really cool, I do love SimilarWeb. If I wanted to add LULU, this is just going to kill both of them. This is just going to kill both of them. Lululemon's the number 2,000 site globally. Lululemon got 33 million visits. Fabletics got 21.41 million visits. And Feet Clothing got 119,000 visits. But here's the important thing. Feet is worth $1.3 million in its last funding round. It's worth a little bit more, but that's what they were valuing at in its last funding round. Let's just say LULU. Lululemon has a market cap of $34.3 billion. So yeah, if you're comparing them, we've got $34.3 billion and we've got 1.3 million. Magnitude's different. You know what? Feet changed my mind. I like feet. Wait, that seems a little weird, but I'll say it again. I like feet. So we got 2 more left. I'm going to go to the one that's actually a company, and then we're going to dig into the venture capital one a little bit. And I will be honest with you. This one I'm going to talk about now, I actually ordered some olive oil earlier. They sell olive oil on the internet. Who would have thought you needed to sell olive oil on the internet? Now, why did I order some olive oil? Because if I'm going to invest in this company, I want to try their product. So I did set up an initial investment of $5,000. I'll show you right here. I did set up an initial investment of $5,000 and a recurring investment of $250 a month. So spending $35 on some olive oil was not totally crazy. So let's talk about olive oil. This company is called Graza. They make 2 products, one for sizzle and one for spread. I guess. So we got Graza right here. Graza's attention-grabbing bottles hold high-quality oil sourced from the Andalusian Peninsula olives, drizzle for finishing and sizzle for cooking. Drizzle and sizzle. They've got 500 plus points of retail sale. Whole Foods. Let's see if they wrote that there, but I did my research. Whole Foods. 700,000 plus in revenue since holy crap. It's June. 700,000 plus since January. Direct to consumer. Graza's positioning is meant to cut right through the middle of the olive oil industry. It's an omni-channel, meaning they sell across web, they sell online, they sell maybe on Amazon, they sell direct to consumer. They're starting to sell in Whole Foods as well. It sells top-notch extra virgin olive oil. If I break this company down further in the future, which I might, I'm going to tell you what I think about their extra virgin olive oil. Graza's founders bring decades of extensive growth for companies like Magic Spoon, Casper, Warby Parker. Ooh, they got some big companies in there. I like it. Agriculture reason. Graza comes from the chef-inspired proprietary first-to-market squeeze. Comes in chef-inspired proprietary first-to-market squeeze bottles. I have a friend that's a chef. He's up in Canada. His name's Shane. Hey, Shane. I'm going to get Shane's address, and I'm going to... Hey. I didn't say hey to you. I'm going to get Shane's... That was SIRI again. I'm going to get Shane's address. I'm going to send him some of this damn olive oil. Sounds crazy, but if I send it to a chef friend, he's going to tell me whether it's good or not. Now, I got some for myself. Probably give it to family members because I'm not much of a cooker myself. But I'll try it and make something with it. Graza's meant to cut right through the middle of the pack. Why did Sweater invest? Differentiated product. Graza has created a differentiated product with the EVOO, extra virgin olive oil market, given its single source, high quality, easy product designed at low cost. Gonna disagree. $35 for 2 bottles of oil. Graza squeeze bottles are fully opaque and induction sealed to keep the oil fresh, i.e. away from light damage. It's interesting. You normally see olive oil in bottles, be it dark bottles, but still in bottles. So since launching January 2022, the Graza team has experienced strong early growth and certainly sells through 500 retail doors, including Whole Foods, Fresh Market, Foxtrot. No, I could have just gone to Whole Foods. Oh, God. Influence, this is Michelin star booklet, and they've got influencers. So we'll see that too when we look at the web traffic. Other active investors, so it's going to show other active investors. Buzzworthy digital presence. Check out press here. I'm trying to click on it. Doesn't really work. So Sweater team, don't put something that doesn't work there. If you're watching this, organic shares via influencers. Molly Bays and Chrissy Teigen. Thank God for the new iOS. Let's see. I could just paste this in and have it up. That would be wonderful. Did that work? Yes, it did. Okay, so I'm going to show you here. Look, there's Chrissy Teigen's her clove olive oil. She's making some. All I know Chrissy Teigen from, you're going to laugh, The only thing I know Chrissy Teigen from is Chrissy's Court, the short-running season on what the heck was the name of that thing? Oh, I can't even remember the name of it. Crunchel, Fizzle, Crackle. It failed pretty quick. I'll give you the name of it. Actually, let's just look. Chrissy's Court. Chrissy's Court. Quibi! That was it. Yeah, it was on Quibi. But, so let's just take a look. We'll jump back to the phone. Michelin star restaurants. Okay, and there's their product. So, it's time to go to their website. Then we'll see what we can actually find here. So, we're going to jump back to the Cashmere Fund. I got to click back a lot. Okay. So this is our last company, which is called Graza. I think we've already looked at the description, so let's go to their website. Very, very pretty website. I love pretty websites like this. Really. I didn't get that pop-up earlier. Or I might have just dismissed it. I done paid shipping! I paid $42. I paid $8 in shipping. I'm ashamed of myself. I went looking for promo codes. I went looking everywhere. And there's a damn thing that lets me not pay $8 in shipping. Well, that's on me. Hopefully the ad revenue for this will get me back my $8 in shipping. But high quality olive oil that's meant to be squeezed and not saved. Beautiful. Well, look at the food porn. Food porn. 2:15 in the morning Eastern time on June 15th. Last thing I had was some 7-Eleven. Okay. Olive oil is special, but it shouldn't be. Most olive oil in the US, including a lot from the extra virgin stuff, is blended from old low-quality oils. The rest, high-quality olive oils, look great on your counter, but are too expensive to cook with. Well, the solution is Graza! I feel like Billy Mays. You know, you got this oil! Like Billy Mays is dead. Yeah. So let's go British. Anthony Sullivan here for Graza. You see, normal olive oil, just, it's not good. And the good stuff sits around and it looks too good. So now we've got the ShamWow. I'm not sure that's right. But we've got Graza olive oil the way it should be, always fresh, never blended, real extra virgin olive oil. They've got two, one for drizzling, so one for putting on stuff not cooked, and one for cooking. And what's interesting is they sell them in a pack. So, you know, this one is made for eating and never eating, so you eat that straight. It looks like someone putting on some ice cream. I really don't understand putting olive oil. I mean, that's either ice cream or mashed potatoes. It's really weird to put it on ice cream. But they sell that one for $20, and then they sell the one that's for frying stuff for $15. So you got the drizzle and the sizzle. I love it. The marketing here is genius. Drizzle for dressing, sizzle for schnitzel. Beautiful photos. Pictural trees do their best in harsh conditions. Yes, it's a metaphor for the trees that olive oil grows on do their best in harsh conditions. Yes, that's a metaphor for life. This is really interesting. Now, is this recession-proof? Depression-proof? Who knows? But here's the important thing. This is not... Here's what's nice. Something like this can thrive right now when it's not on the traditional market. You might say, what do you mean? Well, if interest rates are not a concern, if short selling's not a concern, none of that's really a concern in the venture capital space. Now, it's going to take a while for this to become profitable, but your money's not going to go down overnight because of what's going to happen in a few hours. Like, 8 hours from now, when they hike the interest rates 1%, you'll see. Could be wrong, could be 0.75, but I'm thinking it's going to be 1%. So you can invest in here, and it's kind of proofed from what the market's going to do in the next few days. Next few hours. Combines oil from 4+ countries. Yeah, so they're comparing. You've got cheap olive oil, Anthony Sullivan says. It's got oil from 4 countries. Then you've got Graza. It says right in the middle, and now I've turned it to Steve Irwin. It's always fresh, actually comes from one country, promotes a healthy heart, and is squeezable. And I guess you could put on your popcorn. Overpriced olive oil, and then canola, vegetable bleached. What the heck is a canola? Oh, what's on your mind? Oh, that's nice. I like that. They made a page on What the F is a canola? And you'll see something I really like about this when we go to buy some. Well, go to buy some. I've already bought some. It shows you where it comes from. So if they have to change location, they can. Made by people who take olives seriously. What we're cooking. Love it, love it, love it. Let's check their Twitter. Let's go to their Instagram. And for the first time, we're going to go to their TikTok. But we'll go there in a minute. Let's buy some olive oil, because that's interesting. I want to show you the buying process, the purchasing process. I'm going to turn myself off on camera real quick. So you'll see it asks, what do you want? Automatically, it's got you in subscribe and save. You get it every 1 month, every 3 months, every 2 months. I just went ahead and I said one-time purchase, put in one set, hit add to cart. It's in stock. It says when it harvested in October. So this is the first year they've ever done this. Use cases, tells you drizzle and sizzle. You hit add to cart. You get it right there. I'm $15 away from free shipping. Should have just bought another bottle. Marketing. Marketing works on investing people too. Just letting you know. I bought Sweater before I knew any of these 3 companies, just based on their slick marketing. And any of these 5 companies, just based on their slick marketing. So, that's the thing. I bought them based just on their slick marketing. But I'll hit checkout. I can send it as a gift, which is what I need to do. And if I hit checkout, it should get me to a checkout page. I don't want to actually check out right now. But it would show me I paid like $42 or so. I paid like $8 in shipping, which is kind of sad. But let's go ahead. FAQs, you can read those on your own. We're going to just take a look at their social. They don't have a huge number of followers. Tweets and replies. Here's the nice thing. They are pretty receptive to their customers, which I love, 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 love. You know the vibe. It's kind of got a Wendy's-like feel. They're more friendly. We got to get you some. So, yeah, they have a fan base that's growing. The subscription thing, whether you think it's insane or not, which I do, whether you think it's insane or not to subscribe to olive oil, the subscription thing works. It gets people hooked, and once they're hooked, the money keeps coming in. And their Instagram, they have a lot of followers. Let's make some soup. Hold on.
Josh here with a hot culinary prediction, and that is, this is the spring of chilled soups. So I'm going to show you how to make one of my favorites. So you start by making the base of the soup.
That was 2 days ago, and she's talking about spring. That's all I'm going to say. Pizza toppings. Oh, this is when they're in the Whole Foods. This is why this is not no pants dancing. I'm very bad at dancing. And yes, I guess that was ice cream. All right, I'm not gonna lie. I love Magic Shell. So me loving Magic Shell, what you just saw right there on that screen, you saw my fat self, which is gonna have to pay more for their funeral because they over 200 pounds. You saw my fat self. That's what I'm gonna have to do. I haven't even seen this before I ordered it. Hey, you want some pig?
There we go.
This is some great marketing.
Have you ever thought to do this?
Don't be shy, girl, go bonanza. Shake your body like a belly dancer.
Oh, look, I have all these recipe ideas for when my olive oil comes. I didn't think I was gonna have much fun with that. Look, it gets delivered just like that. I guess there's no audio there. It's just someone's olive oil. They have custom packages. The bottles are back in town. This looks like fun, but no more fun. Let's dig. Oh, wait, hold on. Hold on. We missed the one thing I said I was going to go to. TikTok.
Olive oil bottles and why they're important. If you look at one of our bottles, you're going to see 3 dates listed. The harvest date tells you when the olives that were used to make this oil were picked. The bottling date tells you when that oil was put into this actual bottle. And then the best by date tells you how long this oil will last if it's stored properly. So why are these so important? Good olive oil should always have these dates listed because contrary to what a lot of people think, olive oil is a fresh product and it's meant to be used quickly. It doesn't get better with time, so you actually want to use it as close to the harvest and bottling date as possible. We go from farm to harvest to bottle as quickly as possible so that we can get you the freshest, most delicious product. So when you get it, don't be shy with it. This oil is meant to be used. Put it on everything and enjoy the fact that you're getting a really fresh, really delicious oil. Today I'm going to talk about the
Interesting. Very interesting. They got that magic shell. So they're kind of cross-posting stuff across the different stuff, but oh wait, what's the
and it's me and your mom. And it's me and your mom.
Okay, that's on their official company account. I don't know how I really feel about that. You make that up.
Spend Earth Day with us.
Oh, okay. I don't know if I'm gonna put my extra virgin olive oil on ice cream, but they say like this is a life-changing thing. So I'm gonna have to try and put my extra virgin olive oil on ice cream. But let's go ahead, back to work, back to what's useful, because again, we're still an hour and 35 minutes into this. We got one more after this, but I'm not sure this is gonna be on Crunchbase. It's not. So we might have to go some different places. Let's go to Google. So we can see we tried Graza olive oil. People like it. This one we might not be able to get much information on other than, you know, if other oil gives you anxiety, Graza's for you. It's super positive. It's super positive all over, which I like. It's at different retailers. It's a milk street store. I wish I knew how much money was already in this company, but it might just be doing a seed round now. That might be why it's not showing up here. It's new. Yeah, actually, hell, you saw this is their first harvest. They only started in January. We literally don't have any information on Crunchbase for it because it doesn't exist. Just for random, Olive Oil Lovers is a web shop. Olive Oil Commission of California. Olive Oil and Vinegar. Olive Oil Source. Olive Oil Factory. Private Labeling and Co-Packing. Olive Pit Shop. I think that's about the closest thing we're going to find as a online olive pit shop, which is weird. But let's copy the website address to make my life easy. And let's go and take a look at some web statistics, because I love web statistics. So, Graza.co. Holy crap. They are getting traffic. They are getting traffic like a mofo. But what's interesting is they're not really getting the traffic on mobile. You'll see that they're getting traffic on desktop, which doesn't jive with the whole worldwide thing. I actually want to look at, let's look at since inception. Oh, I'm not on the premium stuff. So try our premium accounts, 37 months. So I can only look at the last 3 months. But country rank, global rank, industry rank, it's ranking it in fashion and apparel. 17,000 monthly visits, 10,000 unique users, 60% bounce rate, but that bounce rate's actually fine because if you look at their site, there's really just one page. So 40, basically, it's not guaranteeing you a 40% conversion rate to purchasers, but it's a pretty high purchase rate. The purchase process is really frictionless. They have Apple Pay, they have Google Pay, they have everything. I was able to get on that website, and when I actually did the purchase, it probably took me less than 45 seconds to actually do the purchase. People visit an average of 2.5 pages, and you can see, look, there was a... Now, this is a very interesting V pattern, and I want to talk about this pattern because what causes this pattern, what causes a pattern like this for an industry like this, for something like this, that nice little V shape, is generally caused by media attention. What do I mean by that? Shark Tank, Oprah's Favorite Things, different stuff like that. So if I look at Graza, just for information, when I say Shark Tank, Oprah's Favorite Things, So you'll see these things 2 weeks ago, 6 days ago, 2 weeks ago, are hitting 2 weeks ago. And these are hitting in February, March. So here's the question. You know, what happened? There wasn't media. So what you're going to see, you're not going to see this information live, but based on just the traffic and what we're seeing here, and I'll make it bigger so you can see all these different kind of search terms there, it looks like this is on a perfect trajectory for heading back up, because this is May. We'll see June at the end of, yeah, this is good. This is good. It's a good V. I don't know what the heck happened in April. Maybe they didn't have any oil. Maybe the oil was out of stock. But you'll see, here's the important thing. Their customer acquisition costs is almost non-existent. What does that mean? Well, most of the stuff that's coming in is direct or organic search. People are finding it. They're getting referrals from all these Instagrammers and other stuff like that. But it's mainly direct search terms. And you could see CAC, customer acquisition costs. There's a reason I show every video. It's very important. Is their customer acquisition cost, if they're buying ads, is super cheap, which is great. So it means that, their product can cost less. I guarantee you their product doesn't cost anywhere near $30, $35 to make a bottle of 2 of them, but their product can cost less, and that's what we're really looking for. Let's take a look at what else we got there. Mostly United States, but also Australia, interestingly. Top paid search terms, we don't really have any yet, because they're not paying for search terms. Thing testing. It's computers and electronics, kind of weird. Really weird. Graphics, Trump preferring industries. Yeah, that could be wrong. But look at that. You remember we talked about Instagram? Hell, look at that. This is Instagram. That's all it is. That's the Instagram right there. That's what's causing that traffic. Shop.app, I'll tell you what that is. You wanna know what Shop.app is? Shop.app is right here. I'll get you us to Shop.app again so you can see. Here's what that's showing us. Now, I can't guarantee this, but I believe Shop.app, which is this, is showing us a conversion rate. And by a conversion rate, I mean this is showing us that about 36% of people that go on that site eventually buy something, or at least get to the shopping page. So the destination page, they go onto their Instagram, or they go out to their Shop.app. That's outgoing and incoming traffic, which is insane. Social traffic, Twitter. They get a lot of Twitter, YouTube, Pinterest, Instagram. Let's just see. I want to see if TikTok's on that list. Pinterest. Nope. But Instagram. Their Instagram game is strong. Okay, that's what I'm saying. That Instagram game, that's some strong Instagram game right there. I like it. I like 4 of these companies so far. Now, again, this is so early, we're not even finding it here. The Graza.co, we're literally not even finding it. So, let me look around. Okay, so we're literally not finding it. Graza.co, but it looks good. They've got their marketing right. They've got it. Their CAC looks really low. Now, remember, their CAC, their customer acquisition cost, is very important in a direct consumer space. Look, this is going to be hard to sell in retail. The fact that they're in some Whole Foods, they're not in every Whole Foods. I haven't had a chance to go to my Whole Foods yet, but they're not in every Whole Foods, and I ordered it to the door, and I probably got screwed on shipping. But the fact that they've got that's actually super duper awesome. I like it. This is 4 for 4 so far. Again, we can't see all the financial info. We can't see how much money they're losing. We can't see how much money they're making. We can't see everything like that. But you gotta love the product, because as weird as it sounds, we're buying into these companies as sweater members and Cashmere Fund people. We're buying into these companies before they matter, which is insanity, which is really quite cool. But I want to look at the one that I kind of questioned. I'll be honest with you. This one seemed really out of place because it's kind of a funception. And you might go, what the heck do you mean funception, Richard? Well, I mean, if you remember, let me see if I can, I might have to go to my fund, go to the Cashmere Fund, history, hold on, okay, there we go, okay. So, it's kind of interesting, but this is kind of like a pimp my ride thing. Let me see if I can find this on YouTube. So, pimp. I bought a band of Pimp My Ride minivan. No, kind of like when Ice-T used to go, I know you like cars, so I'm gonna put a car in your car to give you more car for your car money. That was a really, really bad Ice-T impression. Please don't leave comments below, but it's kind of a meme. Let me see if I can pimp your ride meme. Come on. Give me the meme. On your family. Oh. So we made this is yo dog, I heard you like holidays, so I put a holiday in your holiday so you can holiday while you holiday. If you remember Pimp My Ride back in the day, this is I heard you like FG people make. So I'm gonna do this in a Pimp My Ride style. It's yo dog, I heard you like VC funds inside your VC funds. That's what we got. We got a VC fund inside of a VC fund, which is like, So this is a venture capital fund inside of another venture capital fund. And as our last one on this list of the first five investments into the sweater fund, the Cashmere Fund, which Cashmere is a type of sweater. So let's jump over to the phone, and we're going to read about the last one. We've already read about Feet, Early Bird, After.com, and Graza. Love all four of them. This one I was not in love with, but maybe I can follow. But you never know. So let's open it up. Grass Ventures, traditional 506C, $10 million funding in pre-seed and Web 2.3 community in U.S. and Latin America. So we're investing in a venture capital fund to invest in a venture capital fund. So they have $10 million in funds they can invest, 50% underestimated, underrepresented, limited partnerships. Okay. The unicorns of tomorrow will owe their success to leveraging the community as a source of competitive advantage. Ganas Ventures is a $10 million fund investing in pre-seed, Web 2, and Web 3 community-driven startups. Now, let me be very clear. Web 3 does not mean crypto. Web 3 has nothing to do with crypto. So they're not saying crypto. There might be some crypto companies here, but it's not crypto. Ganas believes in creating generational wealth through community, as highlighted their thesis of investing in diverse, community-driven founders addressing large problems in growing markets. Ganas Ventures is run by a lady who's building early-stage, I'm not going to try and actually it's easy, Lolita Tubb, early-stage VC boutique franchise beyond Lolita's impressive online following. She brings 15 years of experience working within Silicon Valley, investing in 91 startups as a scout angel venture capitalist. So essentially, we got a VC fund inside our VC fund. Fund manager market fit. So why we invested? Basically, here's what they're doing. It seems like, we'll dig in, they're investing in this woman because they couldn't get her to join their team. They couldn't get her to work for Sweater, so they said, we're going to give you money and let you manage it. And I think there might be a problem there, but we'll talk about that in a minute. Has access to top-tier deal flow through a large following and network. Yeah, that's exactly what's going on here. First investment in the fund is Latitude. Oh, first investment in Fund 1 is in Latitude. Okay, so that's what we're really going to look at. We're going to look at this company called Latitude to give us an idea. But essentially, this is a fund that's going to look at more funds. Additionally, prioritizes investing underrepresented founders. So they're saying women and minority and transgender founders, LGBTQ plus IA. I'm sorry if I got that wrong. Community-driven alignment. Latin America represents 600 million people and 6 trillion of GDP. This lady already has 68,500 followers on Twitter. I assume it's her, not her company. It's a community of LAS, so Latin as a service, diverse founders and funders, and a tech startup. Latin America as a service, like SaaS, software as a service. Latin America as a service. But this is the one. We're going to look at the actual fund. We'll look at the website, but I don't think it's going to give us much. We'll look at Crunchbase, but I do want to circle back around to their first investment, because what we're really investing in right now is that investment, is what it seems like. So let's click. Not much of a website here. Past investments. Oh, we have a deck. Yay! I love decks. Okay, so just I want there to be full transparency in how I got here, because that is always super important. So I just clicked on the Ganas website. I clicked up to LP, and I hit deck. I love decks. They're just little slideshows. I'm going to shut myself off when there's something in the corner. We invest in pre-seed, Web 2, and Web 3 community-driven startups in the US and Latin America. And it's run by that lady. You can see she's got 68.1 thousand Twitter followers, branded community expert and investor, 90 plus investments with blue chip company investors, 680,000 people community on Twitter, which who knows how many of those are bots. Thanks, Elon. And 100, so she's got proprietary data points and everything like that. Okay. Nearly 80% of founders report a bit of a community of users. Alexis Ohan, I like him. Yeah. Minimum viable community. Okay. Again, we're not going to go over all of this, but Alexis right here is one of the founders of Reddit. So he's one of the founders of Reddit, which I really like Reddit. CRO of Notion, not familiar with that. Sample. Community-driven companies lead to unicorns and outsized returns. Airbnb, Notion, Mongo, Peloton, Bisto, Rappi, Upcoming or Glossier, Patreon, Quora, and Reddit. What is a unicorn? A unicorn is something we really want. We want all 5 of these companies, really 4 companies and 1 investment fund, to become unicorns, because it means they're worth over $1 billion. Well, they become unicorns. We become very, 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 very wealthy. Minus, here's where things are getting interesting. If you watch my first video on the Sweater app, Sweater does take a fee. So Sweater takes about a 6% fee overall, 5.5 to 6% fee. And what I don't like is they're taking a fee and they're putting another company in here that we probably won't get to today, but my guess is that this company takes a management fee as well. So if you want a VC company inside your VC company, then you want to pay VC fees on VC fees. I think we need some disclosures in the app on that, Sweater. If I'm wrong, hey, I take it. But I think there's VC fees here, and we are paying VC fees on VC fees instead of, in this case, I know we like this woman, but instead of this case, just investing in Latitude, which we will take a look at. So yeah, it's talking about, so Unicorn is a company that's worth over $1 billion, and investors, especially people that get in before the IPO, are very happy. Timing, COVID, efficiencies, outsized returns. Unicorns are being born due to community. Examples: MongoDB, Airbnb, Peloton, Glossier, Lyft, Atlassian, Reddit, Gong, Webflow, and more. Reddit's still not IPO'd yet, as far as I know. Community-driven, community ROI. Oh, okay. CAC down. Hey, we talked about CAC. If you've watched this whole thing so far, CAC is customer acquisition cost. So CAC down. LTV, long-term value of the customer. It's a term we haven't talked about yet. So you have CAC, which is customer acquisition cost, and LTV, which is long-term value. Again, we're not really looking at this company. We don't really care how many people go to this company's website. So we'll look at it in Crunchbase, but their website really means nothing to me. Oh, fuck. Sorry, I said that under my breath. We're no longer saying businessmen. We're saying business-sized humans. Okay, sorry, that's just businessmen. 99% of people will choose remote work if given the choice. Yep, and I bet you'd never guess what they're going to wear in their remote work. Oh, wait, I think we know. They're going to wear some feet. That's what you wear in remote work. So Cameo, which is so they're just referencing a whole bunch of unicorns. I don't think she has a bunch of. Future is cashless. I agree. Future is cashless. We don't really need cash. The penny is going away. And understated markets. I agree that Latin America is a huge market. And I was just going to mention Nubank. Nubank's one that I invested in. Honestly, the economy took it down. It's kind of not something we want to talk about right now, but I think Nubank is amazing. If you go back, we did a video on Nubank. I'll leave the link below. But Nubank, I think, is a great company. I really like what's going on with them. So, let's take a look. Latitude, a bunch of pictures of her Twitter page, co-investor community. Okay, so yeah. 90 plus founder network. She's getting all the founders together. Yeah, so what this is you wouldn't come work for us, so we're just going to invest in your portfolio. That's what I believe. Sweater, if you're listening, feel free to correct me below, but that's what I'm seeing here, is you wouldn't come work for us, so Come work in our, we're just going to invest in you, which is fine. And this is Granas Fund 1, which they've only invested in one company so far, 75 startups with $100,000 as their first check. So they're going to give away $7.5 million, and maybe 25% of that's fees or administrative costs. But yeah, no, not 20. They're going to keep $2.5 million, give away $7.5 million, and billions to unlock in the community, meaning they're going to make unicorns. So really interesting here. Source. Okay, so source, select, win, steward. So this is kind of showing their path. They're looking at her followers, the community, and then they're driving to sales to do two things. Again, I don't think we can stress this enough. And it's really cool that we've been looking at these metrics and talking about it. They're decreasing their customer acquisition costs while increasing the lifetime value of the customer, their subscription revenue, and different things like that. This was actually awesome. I went with this last. I picked the order of these things completely randomly, as you can see. If you look, well, this one's not. Well, actually, they're not as random as I think. I just swapped out feet and went with Graza. They're not as random as one thinks, but I kind of picked them randomly, and they worked perfectly. So it's just talking about C-suite area, exec area, end user area. So this is the idea, is that, when you get everybody involved, the executives, the normal people, you get everybody in the same room together, they get community-driven growth. And I actually agree with that. A lot of people now are actually going to their employers and saying, I want to use this tool because I use it at an old employer and different things like that. So I agree with everything this fund's doing. Again, I just don't know the fees that are involved in this fund, and I think they should be disclosed. Again, we're looking at her. She's done a lot of things, impressive things. You can take a look. Let's go ahead and let's look at our Crunchbase. So give me just a second to pull up Crunchbase. I know this is there. So let's just go. We're going to jump to Crunchbase. I know for sure this is there because I looked this up. Ganas. Ganas. Ganas Ventures. It shows investments. Okay, so these are the companies that they've invested in, which is Latitude, and that's the only one they've invested in. I think the only people. There's not much information. So we don't have a huge amount of information. So they invested February 28th, 2022. Latitude was valued at $11.5 million when they did that investment. And I think probably the best thing we can do now is look at what they invested in. Latitude is on a mission to provide infrastructure and capital to world-class entrepreneurs from Latin America. Oh my God. We're back to Exhibit. We're literally back to my buddy from Exhibit. You like investments, so you're going to make an investment in an investment that's going to make an investment in an investment. Yes, that's what this seems like. This seems like we like Exhibit, and it's an investment in an investment in an investment in an investment. Sorry to keep with the Exhibit impressions, but yeah. Okay, so we got funds. You got, oh wow, they have a lot of investments. So here's what's going on. Okay. Funding round, seed round. Okay, so yes, that is exactly what this is. Holy hell. So again, we're going to follow this because I want you to see this. So we've got the Cashmere Fund thing. Let me find it. Let's go to the history. All right. Sweater. Okay. So you've got this, which has the Granas Ventures in it, and then Granas Ventures has invested in this, which is Latitude, and then Latitude has invested in all of these companies. Well, yeah. Latitude has invested in 26 other companies, which is pure insanity. So what you're doing is you're investing in one company, and then you're getting in a whole bunch of other companies. Okay. Yeah. Yeah. This is interesting. This is kind of like, you know what this is? This is kind of like you bought 4 normal stocks and then you bought a Latin America ETF for venture capital. That's what we've really done, is you bought a Latin America ETF for venture capital. Realistically, we ain't got the time right now to go through all these companies. I'm going to look if there's anything that I've heard of. Plug. So these, nothing here. Nothing here looks, but let's go ahead and let's take a look at like their first company. It's an infrastructure to launch and scale financial services in Latin America. 31 investors, total funding amount. So that one doesn't have the potential to go up as much is what it seems. So what's interesting is I like it. It's kind of like a market hedge. It hedges against, it looks like, let me give you the actual number. I think it was 26 different bets. So Latitude has 26 investments, and Latitude's, one of Latitude's investors, I think that's important to know, that's investments. We've got investors in the funding amount. So one of their investors was lead investors, number of investors. Okay, so we've got our individual investors. Oh, crap. There's some good people in that. Sorry, I'm not on the screen. I'm going to show you how I got this on Crunchbase. So I just went to, so I'll back it up twice more. So we're at Granas Ventures on Crunchbase. And Latitude, yeah, so Latitude actually raised a lot of money. Now you can see, we go Granas Ventures, we go to their investments, we go to Latitude, and we can see they're in all those things. And Latitude has gotten a lot of funding from a lot of big companies. A lot of Andreessen Horowitz is the lead investor. They're a huge investor. They were in Facebook. They were in, I mean, let me not even guess. What has Andreessen invested in? 1, 2, 3, 1. You could see all of these different things. Where's the big ones? Software, information technology. Oh, recently viewed. No, I want to see number of investments, and you can see you won't know all of these, but Facebook and other stuff is in these investments. So they have a very big amount of diverse, well, that's a diversity investment. But if we go lead investments, Andreessen has led a lot of companies that you've probably heard of before. Okay, exits. Here we go. These are companies that the company that you're invested in was the lead that the company you're investing in, which we jumped through a few hoops to get there. Latitude's lead investor was also the lead investor for Coinbase, Lyft, GitHub, Twitter, Box, Robinhood, BuzzFeed, Airbnb, PagerDuty, Zynga, Enjoy, Pinterest, Affirm, Reddit. This is the kind of talent that you've got at this company. So essentially, this is a backhanded way to buy into an Andreessen Horowitz for normal people to buy into an Andreessen Horowitz Latin American venture capital fund. Now that took a lot of digging to figure that out, but I want to see if the lady's there. Oh, yeah, Granas Ventures, right there on the screen. So you see, our lead one is Andreessen Horowitz. This is fantastic. I can't believe we're 5 for 5 so far, because there's nothing I like more than being able to invest in something that Andreessen Horowitz is already invested in. I love it, 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 love it. I really like this. Latitude.com. Building world-class tech companies in Latin America just for fun. Let's go ahead. Again, I don't think this really matters, but we'll check it. Well, that's got a nice number of visits. That's got a really nice number of visits. It's got a nice number of unique users. That's got a nice long duration on the website. Yeah, direct traffic, organic search. Again, this is an investment company, so we're not gonna dig too much into this right now. People referring it in Spotify and everything's like that. They're probably on a bunch of networks. It refers out to LinkedIn and a bunch of social traffic. LinkedIn. This is a LinkedIn. This is founders of Latin American companies getting in. You could see this is just straight up. This is fantastic. I'm going to be honest with you. I like this fund. I really like this fund. I really like the Cashmere Fund. I'm at 2 hours and 3 minutes in, and we've gone in as much depth as we can for these 5 companies. I'm going to be honest with you. We're going to go back. We're going to look at them. Feet. I love. I didn't think I'd love it. I said, I don't understand athletic wear. I don't understand this company. And then all of a sudden it said, wait, all these people can't work from home anymore. They got to go back to the office. They want to wear stuff that makes it look like they work from home. I like it. Early bird. We like that. It's a way to invest for the kids. for the children. And then we got after.com, an easier way to die. Got some great olive oil that's on the way that I paid for shipping for. And we've got a way, Graza, what I find funny is it doesn't say this is a great way to invest alongside Andreessen Horowitz directed funds. And like I said again, if you don't know what Andreessen Horowitz funds are, I'm 100% sure you've heard of a lot of these companies. A lot of these companies. So what's it time to do? You know what I think it's time to do? I think it's time to invest some more money. So I'm going to buy another $5,000 worth, but I'm going to have to put in $5,002 because I want to get in before other people get in. So I'm making this purchase at 2:54 a.m. I'm getting it for an average share price. Now, that $2 is going to cover a fee. Let's see if they fix this. I want to blur out the bank account real quick just in case, because I obviously don't want to show my bank account. Next. Yep. Oh, okay. So they did fix this. So they do add a $2 fee. You have the end of my bank account. Who cares? They did add a $2 fee, but they added on top because I didn't want to have a random number of shares. So I'm going to just bring that back down. I'm going to hit edit. I'm not sure what's going to show. I want to bring that back down to another $5,000 even. And I'm going to put in another $5,000 because I love these first 5 companies that they went with, because I love the 4 companies and I want to invest with Andreessen. And they're doing the work for you. Look, like I said, I do want to make sure that everybody gets a chance to watch my first video, which is linked below. There are fees involved here, and there are fees you may not know are involved here. And I've got an investment waiting to, I've got $5,000 pending there. There are fees involved here. There are fees that you don't know are involved here. I do recommend highly that you read the prospectus, which I'll show you where you can get that. Everybody should be reading this. I'll show you. So if you go to their main website, again, we're going to go to Fund, scroll down to Cashmere Fund Prospectus. This was made April 2022. Read this. I'm looking for some pages that are useful. I read this all through my phone on another thing, but I want to show you. Okay, so here's the important thing. There are fees, and they go away. But I want to mention this in this video. This is not something you can just mysteriously get out of whenever you want to. I think that's the important thing. There are fees. 185 days after purchase. That's after 6 months, you're going to get charged a 2% fee to withdraw. After a year, you're going to get charged 1.5% to withdraw. After a year and a half, you're going to get charged 0.5% to withdraw of your investment. And after a year and a half, so up to a year and a half, after a year and a half, you're fully paid off and you don't pay any fee to cash out. So the fund shares are not listed on a security exchange. So remember, you have to do it, and you should not expect to be able to sell the shares in a secondary market. So if one of these companies IPOs, what they're saying is that Sweater is just going to pay you out cash. They're not going to, as of right now, they're not going to roll the shares over and give you shares in the company. I do want to show you one more thing. This is all in my other video, but here's an important thing as well. Again, there's about a 6% fee on this fund. This is written. Again, this factors a couple of things, but you have a management fee. You have marketing expenses. You know these slick videos like this video right here? We'll go back to it real quick. This thing is cute, but you know what it costs?
This is you, and this is a sweater party.
That sweater party, I'll tell you exactly what that costs. That costs 3.42% of your money to make and get other people into. Yeah. Management fees. You saw all those people in the video, a lot of people that work for the company. You see pictures and videos of all kinds of people. You're looking at a 6% expense fee. You're also looking at an expense fee in that thing that I said, hey, you got a VC inside your a VC fund inside your VC fund inside your VC fund, VCception, which is that last one. There's a cost to that as well. So the idea is you hold all your shares at the end of this period, your cost of fee. So yep, it's just kind of showing you. I highly recommend you look into this. But I myself, I've done my due diligence. This is 3 hours worth of due diligence. Well, more than 3 hours. The first one's like 1 hour and 20 minutes that went over this. I like it. I not only like it, I love it. If you look at my phone, I now have 252 shares with another 250 shares hopefully going into place tomorrow. I like Early Bird. I like After. I like Graza. I like Feet. And I love the ability with Ganas Ventures to invest with Andreessen Horowitz, which again, you're investing not in these companies, but in companies that the people who invested in these companies invested in. So yeah, I do like it. I not just like it, I love it. I'm going to continue making these. If they get traction, if people are watching them, I think it's great. I'm going to keep making these. If you do have any questions, post them in the comments below. I have to beg again. I'm wearing a sweater that's not from Sweater. I keep seeing your cool sweaters in your video. I put $10,000 in your fund and did a whole bunch of videos on it. I want a sweater so I can wear my sweater while I do sweater videos in the future. I will happily wear your sweater, but I will be honest with you. I don't work for them. I don't do anything like that. Not financial advice. I'm just reviewing and talking about these companies right there. But this was an overview of 5 companies, and even more than 5 companies, because some of them companies have companies and companies and companies and companies. 5 companies in the Sweater Cashmere Fund. If you have any questions, post them in the comments below. I will be doing additional companies if this gets traction. This is Richard wearing his sweater and wearing no pants still from No Pants Profits, reminding you that when you invest with no pants, all you normally have left to lose is your shirt. But this time, you've got a sweater. A way to invest in IPO companies before they IPO. Venture capital for normal people that are not accredited investors. See you around. Bye.